Hey everyone, it's PJ here from Market Update. Today is Monday, the 10th of August. Hope you all had a great weekend. Sorry I didn't get an update out on Friday. Had to leave the office a bit early to attend to a few things. So let's get into it. A lot is happening and as a result of us being in Quad 3. You know, I've been talking a lot recently about commodities, about inflation, about gold, and all of this stuff is ripping at the moment. It is absolutely the right place to be. The reason for that is because, of course, the US dollar is in crash mode. So the US dollar is getting torched by the authorities there. Basically, they're trying to devalue the dollar for whatever reason to make US exports more competitive. It could be a number of things, but they're certainly, unfortunately, devaluing the dollar. Now that someday down the line that will come back again, but for the time being, the path of least resistance for the dollar is down, which means the path of least resistance for commodities is up. And on your screen, you can see a chart of the CRB index. This is Commodity Research Bureau. I think there's 31 or so commodities in this basket, but basically it has just, slowly and steadily since early June, just moved left to right, up and to the right. This is a sign of inflation. It's a sign of things to come in terms of more inflation in commodities. We're going to see that in, we've already started to see it in silver. It has taken off. I've put on a silver position for us. We continue to see interest rates declining. They will continue to decline. The US dollar index, there you go, falling off a cliff. Let's see, do I have any other interesting? Bitcoin, of course, which I don't invest in. I can't stand Bitcoin or any of these cryptocurrencies. I just don't believe in them. I'm not a buyer at any price of those, but in any case, things like Bitcoin will continue to do well. I have a different chart of earnings, which I'm going to show you. But one of the key things, again, that I want to just point out, and actually on this chart pack, yeah, it's the same. These two charts are basically the same. I want to remind you of that inverse correlation between the US dollar and a number of things. So what this table is showing you is that over a 15 and 30-day period, which is what a lot of the algorithmic machines that do all of the programmatic trading, these metrics are two things that they key in on, which is that correlation of assets. And so what this is showing you is that gold and commodities are almost one for one inversely correlated. Now, again, what that means is if you're almost one for one inverse, it means that for every dollar or point or whatever you want to call it, that something goes down, that thing that's inversely correlated to it goes up. And it's also why on Friday, the dollar had a bit of a bounce. And it's why we saw a sell-off in gold and the miners and silver and a few other things. This will be short-lived. In fact, it's a buying opportunity, and I did take the opportunity to add or put on some positions in, I think it was the junior gold miner ETF, and I'm putting on other things like materials and copper and pretty much anything commodity related that I can buy and own in your account. I am doing that. And this is going to be a trade that's going to play out easily for the next 3 months, hopefully till the end of the year, and possibly, well into next year. I obviously, though, and I don't always say this, but I'll say it again, I have said it before, is I reserve the right to change my mind and to pivot out of this stuff, out of inflation sort of hedges. So just bear in mind that part of being a full cycle investor, I'm sure you've got the gist of this by now, but part of being a full cycle investor is being able to pivot and get out of things that have a lower probability of positive return and get put into things that have a higher probability of positive return. That's really what full cycle investing is at a very high level all about, and understanding how and when to do that. One other thing I just thought I'd highlight for you quickly, if I have the chart here somewhere, I do. There we go. We've had pretty much most of the S&P 500 companies report. We're getting down to the business end now. There's about, 50 odd companies left to report. Earnings look pretty bad. One of the highlights and standouts, though, is the financials. So here you go, 65 of the 66 financials reported negative 32.5, more than 32.5% earnings growth. This is a shit show with the banks, the financials. There is absolutely no reason right now why you would own a financial. Well, actually, I shouldn't say that. There are some decent companies. This is where in the financial sector where you'd want to be a stock picker as opposed to sort of buying the broad index, as it were. Furthermore, energy, look at that, 25 out of the 26 energy companies. That is just, slit your wrist kind of stuff. If you were in energy right now, you would have had your head handed to you. That's a lot of H's, a lot of alliteration there. But anyway, that's horrendous. Minus 54% sales growth, minus almost 55% earnings growth. These companies will come back. Energy companies will. There will be a time when we'll allocate capital to those companies. But right now, go back to that. Right now, their balance sheets, their debt cycle, their leverage is going to be really, really an impost for them growing earnings and being successful going forward, at least in the next few quarters. Sure, they'll repair their balance sheets, there'll be bankruptcies, all this other stuff. And of course, if oil prices rise, which they should because the dollar's falling, it will start to help the recovery of the energy sector. But as it were right now, staying well away from energy. What else can I tell you about this? Not a whole lot else to say there. Let me just see if there's any other interest. Natty Gas. This is another one that I've been investing in. I'm making the natural gas play through a company called Range Resources. They're a natural gas player. Their stock has been pummeled, and of course, with natural gas prices rising now, and they will continue to be the benefactor of a falling dollar, rising inflation. And it's the middle of summer in the U.S., mind you. Wait till winter rolls around. Companies like that will continue to appreciate in value. Let's see, I've already talked about treasuries. That's about it, really. So kind of a short update today. I just want to remind you, again, where we are. So the U.S. Quad 3, exiting Quad 4, having exited Quad 4 into Quad 3 now, kind of a shallowy looking Quad 3, but we'll see. That means the dollar trade is off, but it still means that our interest rate trades. So in other words, interest rates are going to stay lower for longer. So anything interest rate sensitive will continue to be an asset class we want to hold. So I'm talking about real estate, utilities, these two, even the inflation protected tips. So all that sort of stuff we want to continue to own. And of course, gold and silver and the gold miners. Any pullback here is going to be an opportunity for me to buy more because we're in a bull market in those things. And of course, you're going to get corrections. Like for any of you that have been listening to me now for the last few months or have traded or are familiar with markets over your course of your lifetime, you know that things go up and they come down. And what we're really trying to do here, again, as full cycle investors, is get onto a winner and ride the you know what out of it. Just ride that thing until it has nothing left. And so right now we're fairly early positioned in the commodities situation. So I'm anticipating that to continue to run. Now, the other thing I'm going to mention, I don't have it here. The other thing I'm going to mention is Australia has been doing very, very well. So remember, Australia is most likely in Quad 1 or 2 at the moment, but the good quads, the green quads, and you would have seen that today. The ASX, we had kind of a so-so day on Friday. I think the ASX was down a little bit, but it's come roaring back, and that's because obviously we are a resource-rich country, commodity-based currency. That's why you're going to see continued strength in the Aussie dollar. That's why you're going to see continued strength in commodities. And broadly speaking, it's why I've started to allocate with the Aussie dollar cash that I've been holding in accounts. I've started to buy positions in the broad index and a few other select parts of our index, our Australian market ETFs. And I will again continue to add to some of those things. But I want to get now broad exposure happening in Australia as well. So I am exceptionally excited about being positioned the way we are at the moment. I do, again, expect to see some of the big headline makers like gold and silver and the miners continue to do well. But of course, we will see some, small corrections and things like that. But I'm telling you, we are certainly in a bull market in those things and will continue to be for some time. And of course, when it's time to get out, I'll certainly tell you that as well. Anyway, if you ever have any questions about anything, please book yourself in for a 15 or 30-minute conversation with me. You can do that in the boardroom. If you have any specific questions about your accounts or anything to access it or set up, please, your first port of call should be Lady, and you can email the team email, which is team, T-E-A-M, at keystonefinancial.com.au. And of course, if you want to email Lady directly, it's Lynn, L-Y-N, at keystonefinancial.com.au. So you have a couple of options there. She'll be the quickest one to respond to you in terms of any admin or questions about accounts and things like that, or access, running reports, all that sort of good stuff. Obviously, if you want to talk about positions, the advice, why we're doing something, whatever, that's my job. I'm the advisor, obviously, in all of this, and I'll be able to have those conversations with you. So please avail yourself of the opportunity to book yourself in for a quick phone call. Let me know when you book in the comment section what you want to talk about. That way I come ready to have that conversation with you, and we can really make it a productive call. So please don't be afraid to do that. Just make sure you give me a few days notice to actually prepare anything I need to prepare and be ready to do that. So guys, short update today. I'll come back with something a little bit more substantial this Friday. I think we're going to have some more interesting data and other points this week to discuss. So until then, have a great week. Stay warm and stay out of this horrendous, crummy weather that we're, I think, going to be getting. All the best. Talk to you soon.